Coming up on Business Incorporated today. South Africa's GDP slumps by 51% in Q2 2020. And Uganda introduces primary dealers for government debt markets. Zambia launches process to register Eurobond creditors. Hello and welcome to the program. I'm Tempula Shaju. This is Business Incorporated live right here on Channels Television. We'll begin the show with fresh data coming from Africa's most industrialized country, where gross domestic products declined by 51% in the second quarter of 2020, owing to the impact of COVID-19 lockdown restrictions since the end of March 2020. South Africa's manufacturing industry contracted by 74.9% in the second quarter, with all 10 manufacturing divisions reporting negative growth rates in the second quarter. Now, the transport, storage, and communication industry decreased by 67.9% as declines were reported for land, air, and transport support services. Now, the agriculture, forestry, and fishing industry were the only positive contributors to the GDP growth, with an increase of 15.1% and a contribution of 0.3% to GDP. And this is the fourth consecutive decline in quarterly GDP since the second quarter of 2019. Let's get some market numbers now from major markets in Africa, which were mostly positive at intraday. South Africa's JSE rose by 0.22% despite disappointing GDP numbers for Q2 2020, while the Lagos-based NSE rose marginally by 0.01%. Egypt's EGX 30 bucked the trends by shedding 1.66%, and Kenya closed negative on Monday, as we've seen. Major Gulf markets in the Middle East were all in the positive territory at intraday, with Dubai's index gaining the most by 0.73%. Still in the UAE, Abu Dhabi's index rose by 0.26% for the period, and elsewhere in the region, Saudi Arabia's benchmark index was higher by 0.55%, while the Qatari index added 0.36%. And European markets made a choppy start today as global investors waited to see whether the dominant U.S. tech sector can recover momentum after last week's rout, while awaiting the key economic data due out of the Eurozone. Conrad Besson is standing by at the Frankfurt Stock Exchange to tell us more. Hi, Conrad. Thanks for joining us on the show. It's been a shaky start to trading on Europe's equity markets this Tuesday, but we know that German exports data is giving sentiment some support. How much of a V-shaped recovery is Germany's economy headed for?
Well, Temple, with a lot of imagination, we can describe this recovery as a V-shaped recovery. But if we want to stick to the letter, analogies, I think it's also fair to say, to describe it as a U-shaped recovery with a bit of a shaky tail, or maybe even take the letter W and describe it like this. Because the recovery definitely is a shaky one, it is happening, but it's also very difficult to predict. And also, we shouldn't just look at business activity from one month to the next this summer. We should also compare the data to the levels before the corona lockdowns. Take those export numbers which came out today. Yes, Germany exported 4.6% more in July than in June. But compared to February, the month before the corona lockdown, the German exports are still down around about 12%. Imports also worth taking a look at because, it's very important for our business partners, mainly in the European Union, how many goods and services Germany imports. There has been an increase of 1% in July, but this also is far from where we want things to be. And, I think this is reflected quite nicely in the German share index DAX today. It's really heading significantly to the downside.
Right, Conrad, a German defense firm has announced plans for an initial public offer, an IPO. How important is this for the stock exchange in Frankfurt? We're beginning to see IPO, which is a primary activity again. Tell us the importance of this particular development.
It's very important, of course, because, new companies coming to the markets, that's the bread and butter for a stock exchange. And, not very long ago, two German biotech firms, CureVac and BioNTech, both working on a corona vaccine, they made an IPO, but they decided against Frankfurt, and they decided to go public at the Nasdaq exchange in the United States, which caused a lot of discussion here in Frankfurt about the quality of financing that you can get in Germany, about the competitiveness of our stock market. Of course, it has to be said, Nasdaq is really the #1 place to go if you want to go public as a tech firm. It's very difficult to compete against it. What makes it even more important that now Hensoldt has announced its IPO here in Germany. It's actually a spin-off company from Airbus. It produces radar technology and other optical technologies that are mainly used for military purposes. The IPO is expected is announced to happen before the end of the year, but many people here in Frankfurt on the trading floors are confident that it's going to happen a bit earlier because it has been announced today.
I like how you describe the IPO as a bread and butter, Conrad. That's something that every market will be itching to have at this point, capital raising by way of IPO. Well, but Conrad, the gas pipeline Nord Stream 2 is becoming a bargaining chip in negotiations between Germany or Western Europe as well as Russia at this point. But could Germany really afford to abandon that project?
In terms of energy supply, Germany actually does not 100% need this pipeline. It's not dependent from it. Germany is able to cover its gas needs also without this pipeline, as Russia or Gazprom, which is the major, gas supplier from Russia, they are very dependent on delivering gas. They have basically not much more to sell. So without the pipeline, we would continue to get gas from Russia as we do today via Ukraine and Poland, which means things would become a bit more difficult, a bit more complicated, a bit more expensive, but it will not be likely that Germany, would be sitting in the cold in winter. The political cost of not pursuing the Nord Stream 2 pipeline, of course, is a completely different matter. This is a huge infrastructure project which has been in the making for many years, many decades even. All the legal paperwork has been finished. Also, the political process has been long. To give this up now would really be a major backlash for Europe, for the European Union and its ability to handle cross-border business with other countries outside the European Union. Nobody here in the business world, at least, of Germany is really fond of the idea of giving up Nord Stream 2.
That's a whole lot about politics and economy there. Conrad Boesen, thanks for joining us on the show this afternoon. It was great to have you on the program. I appreciate your comments. Let's cross over now to London studio, where Juliana Olayinka is standing by to give us updates from the United Kingdom. Hi, Juliana. It's good to have you on the program this afternoon. We know that the pound fell below $1.31 for the first time after the Financial Times reported that the head of the UK's government's legal department has quit. But can you tell us more about this development as it relates to the Financial Times publication?
Yes, I believe I've got limited time, so I'll be brief. It's important to note as well that this isn't the steepest decline of the pound ever. We're not into the 1980s, but it is the steepest decline since March. And it's really because Boris Johnson is facing a revolt. We actually have a storm brewing here in Britain, and it's all about Brexit. Jonathan Jones, who is the head of the UK Civil Department in legal terms, has stepped down. And he's doing that to protest against the British government reneging plaguing on the Northern Ireland Protocol, which is part of the withdrawal agreement. Again, it's very detailed, so unless I've been given sufficient time, it's difficult to go into the detail of that. But let's have a look at the numbers. The all share is down 0.39%, the FTSE 100 is down 0.27%, and the FTSE 250 is down 0.79%. In the currencies market, as we were just discussing, the pound is down on the US dollar by 0.92%, down on the euro by 0.83%, and down on the Japanese yen by 0.91%.
Right, Juliana. So the UK chief Brexit negotiator has also called for realism from the EU ahead of the next round of trade talks beginning in London. He also added that the EU needs to recognize UK's, the United Kingdom's negotiating position. Tell us more about this, and do you have any idea what led to all of these talks between these two key figures?
Well, 4 years of going backwards and forwards between Downing Street and Brussels. It's cost us 2 prime ministers, potentially a third, if this revolt in the Conservative Party gathers momentum. But as we know, the EU's chief Brexit negotiator, Michel Barnier, he is in London for the 8th round of negotiation talks. Again, I would love to discuss this in more detail because it is a very complex issue, as I'm sure we all understand. It is about this Northern Ireland Protocol to try and prevent a hard border between the Republic of Ireland and Northern Ireland. It was agreed during the withdrawal agreement, which was signed into legislation and voted in the House of Commons, that there would be no hard border. There are reports, although we're not sure, but speculation has been growing over the last 36 hours that Britain are trying to rewrite that part of the agreement. And of course, this is causing lots of uproar. Theresa May was speaking in the House of Commons a couple of hours ago, and she was vehemently going against what Boris Johnson and the Conservative Party may indeed do tomorrow. But again, we don't know. And then, yes, there's lots more detail to this, I've got to say, Temple.
Great. So Royal Mail says it expects to report a material loss this year despite seeing parcel deliveries jump by more than a third during the lockdown. Why will Royal Mail expect losses at this point despite all of the increase in delivery that they've recorded?
Well, during the lockdown, in the 5 months up to August, Royal Mail reported that there were 1.1 billion letters not sent in comparison to this time last year. And even though they are seeing a surge in parcels, of course, because people are sending lots of stuff online, their bread and butter is letters. And so they have had an issue with this. Even before COVID, because a lot more people are sending emails. I'm not sure the last time I wrote a letter and sent it. And so there are restructuring issues. So as well as them seeing a surge in the amount of people sending parcels, the slump in the amount of people sending letters is really causing them concern. But they're a FTSE 250 company, and as soon as they announced their results this morning, their shares did rise by over 16%, because as we've seen with lots of other firms, COVID has really accelerated a change in their market vision. So Royal Mail still optimistic, but yes, 1.1 billion letters in 5 months. It's a pretty staggering figure.
We'll continue to watch that space. Juliana, thank you for your insight on the program. So great, let's now go back to our South Africa data that we've been tracking because this is a major economy in the whole of Africa. Gross domestic product declined by 51% in the second quarter of 2020 owing to the impacts of COVID-19 lockdown restrictions since the end of March 2020. Now, South Africa's manufacturing industry contracted by 74.9% in the second quarter, with all 10 manufacturing divisions reporting negative growth rates in the second quarter. Now, the transport, storage and communication industry decreased by 67.9% as declines were reported for land, air and transport support services. Let's get one reaction now coming in.
Let us look at the second quarter of 2020, having recorded a negative growth of 51%. And that's when we're looking at it seasonally adjusted and, of course, annualized. In this regard, we have seen all sectors growing in the negative and contributing in the negative, But as that happened, we have seen agriculture growing in the positive and contributing positively, but it wouldn't be enough to offset the space of a negative growth. Agriculture has benefited well from good rains, and indeed we have seen that in field crops, horticulture, and animal production. It has actually done very well. But otherwise, if you look at the entire economy, even from the expenditure side, imports and exports, all of them have gone on the negative. And if you look at the times that other countries have kicked in relation to their lockdown all over the world, they've kicked in at different times. And comparatively, even when you look at our economy versus other economies, we have seen negative growth all over the world. We've seen the economy of China recording positive growth, but comparability can't work because they've kicked in their lockdown periods at different times.
And domestic commodities market update is up next when we return from this short break. Development of an active and liquid secondary market. From October the 1st, only Absa Bank, Bank of Baroda, Centenary Bank, DFCU Bank, Housing Finance, Stanbic, and Standard Chartered will be allowed to buy newly issued government bonds in amounts of more than 200 million Ugandan shillings apiece. Just like other frontier markets, the East African nation has increased domestic debt issuance in response to demand from local and foreign investors and raised funds for a range of infrastructure projects. And Zambia has launched the process of registering its Eurobond creditors, bringing the country another step closer to tackling its debt burden. Now, Zambia owes money to four main creditors. It has $3 billion of Eurobonds outstanding and owes $2 billion to commercial banks, $2 billion to the IMF and World Bank, and another $3 billion to China. Meanwhile, Zambia's three outstanding dollar-denominated bonds have recorded sharp gains in recent days. The bonds have also benefited from the peers across the region, making progress in debt forbearance talks with China and the Paris Club of Creditor Nations. And South Africa's Shoprite Holdings says it expects to close its remaining 2 stores in Kenya next year, leaving the East African country after opening the first store in 2018. According to the supermarket chain, Kenya has continued to underperform relative to return requirements. Shoprite has been reviewing its long-term options in Africa as currency devaluations, supply issues, and low consumer spending in Angola, Nigeria, and Zambia have weighed on earnings. Well, diesel is an energy-dense secondary fuel used to power many heat engines, including cars, trucks, and diesel generators. Well, globally, the price of diesel is usually lower than the price of premium motor spirits, which is popularly known as petrol. But here in Nigeria, the reverse is the case. For many years, that's what we've been experiencing. But the Dangote Petrochemical and Fertilizer plant is currently undergoing test runs, and this is supposed to be one of the largest and modern production facilities in the world. Now let's talk to Mayo Waige, a research analyst with Financial Derivatives Company, for more on this particular development. Mayo, it's good to have you. Lunchtime on the show. Thank you for joining us.
Good afternoon. Thank you for having me.
Great. So what is responsible for the price anomaly in Nigeria when it comes to diesel that is supposed to be more expensive, but then we now have PMS on the other side of the fraction? But how soon should we be expecting correction in this whole anomaly?
So from the time of Yar'Adua, we have seen that diesel and other petroleum products have been deregulated, while petrol has actually been controlled to a very large extent. And now and with all of this, we saw that even from earlier this year, petrol was selling for as low as 125 naira per liter, and diesel was selling for 213 naira per liter. This is like 100 naira difference. But with the current deregulation happening now, we're seeing that petrol has risen to about 160 naira per liter, and diesel has fallen to about 119 naira per liter, which has reduced the gap in prices between them. all of this is just as a result of deregulation. Now the market forces will control the prices of both petrol and diesel, which it should normally be, because if you look at countries like other West African countries, for instance, where the market forces control the prices of petrol, we see petrol being sold for as high as an equivalent of 300 naira per liter in other neighboring countries. So this deregulation and control is just the reason for the price anomaly between diesel and petrol. And with time, may not be immediate, but with time, with this deregulation, with time, we will see that petrol prices would actually increase and may even be more expensive than diesel as time goes on.
So you're telling us that petrol price will increase eventually. But we know that recently many companies have complained of high logistics costs being responsible for them passing on the burden to consumers through higher prices. Do you think that logistics cost is likely to decline in the near term? And if so, why?
Well, with the increase in petrol prices, the cost of logistics has actually increased too, and then a lot of vehicles also use petrol for logistics. But then petrol prices are not the only factors involved in this. But then, however, we are seeing that there are other sources of fuel coming up. For instance, we have the CNG, compressed natural gas, and with the CNG, it's the beauty of the CNG is that you can use the CNG and fuel at the same time in a vehicle, and then so more logistics company would probably look to this going forward, because it's going to be more efficient for them. If you and it's very easy, just retrofit your vehicle with the CNG to be able to use CNG, and this may actually drive this. We would think that it may drive the price of logistics, but I do not think totally so, because the price of logistic cost is not only based on the price of fuel. There are other factors like infrastructure, multiple illegal taxes. So this actually may not drive the prices of this may actually not reduce the logistic cost in the near future, but then we hope that it would at least reduce the rate of increase of logistics costs over time.
So on the final note, Mayowa, what impacts do you think the commissioning of Dangote complex will have on prices? And do we have an idea when these will come on stream?
So price is basically a result of demand and supply. In Nigeria, we've seen that over time our refineries have been inactive, and because of this, we've had to resort to importing petroleum products, which is why the prices of petroleum has actually increased. But with Dangote's refinery coming up now, and with the scale that it has, and also the advantage of technology, we hope to actually see an increase in supply of petroleum products, petrochemical products, fertilizer products, because it's dealing in these three things. And with increased supply, we expect to see a decline in prices. And then going forward, we actually think that the fertilizer aspect of this would actually come into exist. He'll start producing that as late by the end of this year, and then petrochemical and petroleum products will come in at the end of next year into 2022. All of this we hope would actually drive down the prices of petroleum products and the likes, and we hope that it would, for instance, in the fertilizer space, we hope that this
Thank you. I'm afraid we're running out of time, but of course we'll keep our eyes fixed, of course, on the Dangote Petrochemicals complex that we have in Lekki. Mayowa, thank you so much for your time on the program. We appreciate your insights. She is a research analyst for its economic think tank, Financial Derivatives Company. And on that note, it's a wrap on the show this afternoon. Thank you for being a part of it. I'm Temple Ashaju. I'll see you next time. Bye for now.